Welcome to The Deep Dive, the show where we cut through the noise to bring you the clearest insights from the world's most interesting companies. Today, we're plunging into the second quarter 2025 results from Baidu Inc., ticker BIDU.
Yeah, and it's a fascinating one. You've got this tech giant, famous for search, now making this really audacious bet on an AI-first future.
Exactly. Their latest earnings call, it really paints a picture of this transformation. We're seeing bold moves, but also, well, it's happening amidst a rapidly changing market.
It's definitely a complex story. Some big wins, some, let's say, expected growing pains.
And we're here to help you unpack what it all means. So let's get right into the snapshot for Q2 2025. On the profit side, Baidu actually delivered a bit of a positive surprise.
They did. Non-GAAP diluted EPS came in at RMB 13.58.
Which is about $1.90 per ADS.
Right, and that beat the consensus estimates by, almost 2%? About 1.9%?
So a good sign on the surface.
It is, on the surface. But here's where, the plot thickens a bit. While profits look decent, total revenue landed at RMB 32.71 billion. That's around $4.56 billion.
Okay, and that was?
A slight miss versus the forecasts, and it marks a 4% decrease year over year.
And if we dig into Baidu Core, that's their main business without IQIYI.
Revenue there was down 2% year over year. So what these numbers really scream is that Baidu is at a kind of pivotal crossroads.
Right.
That EPS beat shows efficiency, which is good, but the revenue miss, especially in their traditional ad business, points clearly to a strategic shift.
A reallocation of resources.
Exactly. They're pouring capital into AI, and you see that impacting the short-term financials. Free cash flow took a hit because of it.
And this strategic reallocation, this is where it gets really interesting, right? We saw a very clear mix shift in where the money's coming from.
Definitely.
Their bread and butter online marketing business, basically ads, it felt the pinch, down by a significant 15% year over year.
Yeah, that's substantial. And it's partly the softer ad market in China, but also, fierce competition.
From platforms like Xiaohongshu and Douyin?
Precisely. The TikTok equivalent Douyin and that social commerce app, Xiaohongshu. Everyone's fighting for those ad dollars.
But, okay, on the flip side, non-online marketing revenue.
Now that surged. A remarkable 34% year over year. It actually crossed RMB 10 billion for the first time ever.
Wow. And the engine behind that?
Primarily AI cloud. That segment saw robust growth, up 27%.
And management was pretty explicit about this strategy, weren't they?
Very clear. They said they're purposefully leaning into subscription-heavy enterprise cloud and pruning project work.
So shifting from maybe one-off projects to more stable, long-term client deals.
Exactly. It's about stabilizing revenue and margins over the long haul, building a more predictable business base.
Makes sense. So they're consciously backing away a bit from the volatile ad side to build this recurring revenue in AI cloud. How's that playing out performance-wise within AI cloud itself?
Well, it seems to be a critical long-term play, and the strategy is showing results. Subscription revenue is now over half of their total AI cloud revenue.
Over half. Okay.
And it's growing steadily. There's subscription-based AI infrastructure, the foundational tech that grew over 50% year over year.
That signals pretty strong adoption then.
It does. And they've also highlighted some impressive efficiency gains, like their big GPU clusters, the AI brains, essentially.
Yeah.
They're hitting over 90% utilization rates, which is super efficient.
Yeah.
Partly thanks to this clutter system engineering breakthrough they mentioned, pre-fill decode separation.
It's technical.
It basically speeds up how their AI models run by optimizing memory and processing. Better tech, plus deeper client relationships and good growth from mid-tier companies. It points to a healthier, more sustainable customer base.
Okay, so that's quite the pivot in their business model. But beyond the cloud, where else is Baidu flexing its AI muscle? Because this is where it gets really fascinating, I think.
Oh, absolutely. It feels like a full-stack AI commitment. They've open-sourced Ernie 4.5, their big language model, kind of like GPT.
Right, part of a whole series.
It's a 10-model series, yeah.
Yeah.
And they confirmed the next flagship version is already cooking. Plus, they launched MuseSteamer for video generation, with a big update apparently coming soon.
So it's not just tools, it's reshaping how we interact with information.
Exactly. And nowhere is that clearer than in their AI search transformation. It's really picking up speed.
What used to be just static links
Is fundamentally changing. By the end of June, AI-generated answers were on over 50% of mobile search result pages.
Over half already.
And it jumped to around 64% in July. This isn't just a minor tweak, it's a full restructuring, moving from text links to intelligent, structured, even multimodal AI responses.
Multimodal meaning video, images.
Yeah, interactive elements, not just text. And management calls this the end game of AI search.
The end game. What does that imply?
It's evolving from just giving smart answers to actually completing tasks, connecting real-world services.
Like asking search to not just find a restaurant, but book it.
Exactly. The goal is moving from general results to truly personalized pages. That unlocks huge commercial potential. They're anticipating more ad inventory and maybe even shifting from cost per click
CPC.
to a cost per sale or CPS model, where advertisers pay when a sale actually happens.
That's a much higher potential value per
A
interaction.
much higher ceiling. And this AI transformation has already touched over 90% of Baidu app's monthly active users. Engagement metrics like MAU and time spent are apparently showing sustained improvements.
It's about making search stickier, more useful.
More personalized, more valuable.
Oh.
Absolutely.
Speaking of valuable, let's talk digital humans. Sounds a bit like sci-fi, but Baidu's making it real with Ernie.
Yeah, and they're getting impressively realistic and capable. The standout example was that 7-hour live stream with the digital human version of a top influencer, Longha,
And it generated
tens of millions in GMV gross merchandise volume. Basically total sales value.
tens of millions from a digital person. That's huge.
It is. It really shows the commercial potential. Revenue from digital humans for advertisers jumped 55% quarter over quarter.
Wow. How much does that contribute now?
About 3% to Baidu Core's online marketing revenue. And then agents, the AI assistants doing tasks, they saw 50% quarter over quarter revenue growth for advertisers too.
And agents contribute.
Now 13% of Baidu Core's online marketing revenue. That's up from 9% last quarter.
So these aren't just gimmicks. They're becoming real revenue streams within the ad business itself.
Meaningful new streams demonstrating new ways for brands to connect beyond just traditional ads.
Incredible. Okay, so from AI search to digital humans, quite the push. Let's shift gears to something more tangible, literally, autonomous driving. Apollo Go, their Robotaxi service.
Still scaling rapidly, and the numbers are pretty remarkable.
What did Q2 look like?
Over 2.2 million fully driverless rides provided to the public. That's up a staggering 148% year over year.
148%. That's massive growth.
Their strongest quarterly growth in 2 years, actually. And it's not just growth in China. They've announced these strategic, multi-year partnerships with global ride-hailing platforms.
Yeah, Uber and Lyft.
Uber for rollouts in Asia and the Middle East initially, and Lyft for key European markets, starting with Germany and the UK.
Partnering with these big names, what's the strategy there? Seems smart.
Oh, it's a genius move for rapid, asset-light, global expansion. They leverage the partner's local presence, their existing infrastructure.
Avoids building everything from scratch.
Exactly. Much faster, much more cost-effective way to scale internationally. And what's really compelling is Baidu's already achieved positive unit economics in China.
Meaning each ride makes money.
Yep, even in markets where fares are much lower than major overseas cities, it proves the model works financially.
Gives them confidence for these higher fare international markets.
For sure. And a key differentiator is their RT6 vehicle. It's purpose-built for level 4 autonomy.
Level 4 being highly autonomous in defined areas.
Right, and the RT6 was designed from day one to have the lowest unit cost globally. That's a huge manufacturing edge for broad rollouts.
So big picture, what really sets Apollo Go apart long term? Lots of companies are chasing self-driving.
Yeah, it really boils down to 3 things, I think. 1, their cutting-edge tech. 2, massive operational experience.
How much experience are we talking?
Over 14 million cumulative rides, 200 million autonomous kilometers driven. They lead globally in both left-hand, right-hand drive markets. That's a ton of real-world data.
And the third thing?
An extraordinary safety record. Plus, their experience in really complex places like right-hand drive Hong Kong where they're expanding testing. It validates how adaptable their tech is.
Proves it works in tricky environments.
Exactly. That deep operational know-how gives them huge confidence for scaling globally, especially into those higher fare markets where the profit potential is even bigger.
Okay, so putting it all together, what does this mean for us just trying to understand Baidu's path? This earnings call, it really shows a company in deep transition.
Profound transition, yeah. The decline in online marketing, their traditional cash cow, that's clearly a concern, no doubt.
But it is partly offset by that impressive AI cloud growth and all these strategic moves in AI search and autonomous driving.
Right, it's attention. And the market's reaction seems to reflect that. You could call it cautious constructive.
Cautious constructive, meaning
Well, there's appreciation for the AI momentum. It's clearly robust. But also concern about those ongoing ad market headwinds, plus the heavy AI spending that's hitting the bottom line short term.
people want to see proof points.
Exactly. Clearer signs that core advertising will stabilize and that free cash flow, which went negative this quarter because of all that AI capital expenditure, will improve.
It sounds like the new CFO, Henry He, has a balancing act on his hands. Investment versus discipline.
He definitely does. He reiterated a commitment to cost discipline while funding priority AI bets. His credibility, Baidu's credibility really, hinges on keeping that cloud growth strong and seeing search trends stabilize in the back half of the year.
The whole AI transformation story depends on execution now.
Absolutely. It's positioning them for long-term growth, leveraging their full-stack AI, catalysts to watch, continued rollout of AI search features, new ad formats, big enterprise cloud wins.
The commercialization of Apollo Go via Uber and Lyft.
That's a big one. And of course, any signs of a broader China ad market rebound. Also, don't forget their focus on a self-sufficient supply chain, like homegrown software for chips.
Crucial in the current geopolitical climate.
Especially for sustainable innovation within China's AI ecosystem.
Okay. Now, this is definitely not financial advice, but just thinking out loud for folks tracking these shifts. How might the market grapple with a company like Baidu undergoing such a huge, expensive transformation?
It's a really interesting question because it's such a complex narrative right now. You've got this massive potential upside if the AI bets truly pay off big.
Right, like if AI search monetization really takes off with that CPS model, or Apollo Go scales globally faster than expected with Uber and Lyft.
Yeah, imagine that. The stock could see a huge upward re-rating, a fundamental rethink of what Baidu is actually worth.
But there's always a but.
There's always a but. The market has to weigh the risks. What if that ad market weakness drags on? What if AI monetization takes longer? Or that free cash flow burn continues, especially if interest rates stay higher?
Discounting future growth more heavily.
Precisely. So that uncertainty is why the market reaction feels a bit subdued, even with these huge strategic shifts happening under the hood.
Yeah.
People are basically asking, is Baidu morphing into a much more valuable AI powerhouse? Or will it get bogged down in these transitional growing pains?
It's a high-stakes bet on the future direction.
Definitely.
So to wrap up, Baidu's Q2 2025 shows a company all in on an AI-first future. They're navigating big investments, big market shifts.
Traditional online marketing is facing serious headwinds, no question. But the AI cloud growth is strong. And the strategic moves in AI search and Apollo Go offer really compelling long-term possibilities.
The market's immediate take seems cautious, though, underscoring that need for continued execution on monetizing AI and stabilizing the core ad business while they build this new future.
Yeah. And maybe a final thought to leave folks with. Think about how quickly an AI transformation, once it really hits scale, can reshape an entire industry. What could Baidu's heavy early investments mean for its long-term position, not just in China, but against the global tech giants, as AI becomes more central everywhere?
That is a big question, a lot to chew on there. Remember, this has been The Deep Dive. We aim to provide insights, not financial advice. Always do your own due diligence.
And we appreciate you tuning in.
Let us know your thoughts on Baidu's future. We always like hearing different perspectives.